Well, the Fed just raised the interest rate 0.75%, the largest increase since 1994. That big jump is an attempt to bring down inflation.
And Cassandra Cummings is an investment expert and financial advisor and the creator of the Stocks and Stilettos Society. She joins us now to talk about how this hike impacts all of us. Cassandra, I want to hear more about what your company does here in a minute, but let's talk about this big move by the Fed here. Too much money in the economy driving up prices here, but the stock market, rallied on that news. So how do you see that big spike? Is it something you expected?
Yeah, the Fed has been a long time wanting to raise rates, and it's now come to a critical point where they have to actually contract money out of the money supply, which is driving up a lot of these gas prices, food shortages, and things of that nature. And so this move by the Feds has been the first in 28 years to do such a huge rate hike, and that's going to affect, spending for everyday consumers.
Yeah, and usually, we see them raise the rate sort of little by little, 1/4 percentage point, another 1/4 percentage point a few months later or a few weeks later. To see it 0.75% just right off the bat there, is that concerning for the markets, for real estate, for unemployment? Kind of what are your thoughts on that, how quickly it's happening?
Yeah, it was a huge jolt today. The market rallied on that news because it's been long overdue. Inflation has been sort of creeping up, and so Wall Street reacted positively because they've been waiting for the Feds to actually press the gas on being able to contract the money supply. And so they have to make some changes to bring these prices down. It's really putting a hurting on, everyday working people to have gas prices and food skyrocket to this level.
Cassandra, do you think the Fed has a handle on this? Are they going about things the right way? Janet Yellen came out a week or so ago saying, yeah, I made a mistake. I underestimated it. What's your thoughts on the way they're dealing with this?
Yeah, this seems to be trial by, error, trial by fire. And so I think that they really are trying to use everything that they have in their toolbox. If they're going about it the right way, I think that they're doing the best that they can with the information that they have. So we'll see what the effects will be, in the next couple of months, if this rate hike was the right thing to do.
In the meantime, let's talk about what this means for the average consumer. I guess on the plus side, if you've got a little bit of money in the bank, you're going to get a better interest rate on it. But if you're looking to borrow money, that's going to cost you a lot more. So where do you see it having an impact on, let's say real estate, even something like gas prices?
Yeah, definitely. The cost of money is going to go up. We're going to see this in the form of increased mortgage rates. We've seen that happen with mortgage rates creeping up as well. We were in historical interest rate territory when it came to housing. So we'll see more buyers not be able to make these types of purchases. We'll see credit card interest rates increase as well. So like you mentioned, savings will go up slightly, but we're really going to get hit heavy on the mortgage side as well as credit card interest borrowing rates as well.
So given that, Cassandra, when people are doing their budget here, what do you advise people if they're like in the housing market or if they need to buy a car? Do you say hold off? What is the advice you give people?
Yeah, I would say pump your brakes on some of the spending that you may have planned until the market sort of cools off a little bit. The bears have definitely made their presence known over the last few weeks in the market. And so what you want to do is be smart about this. And it's okay to wait it out. You don't necessarily have to make a move per se in the stock market, but I would wait until we can really see if these rate hikes are going to really bring these prices down for the everyday consumer.
Yeah, we'll see a lot of people watching. Okay, thank you so much, Cassandra Cummings, for joining us today.
Thank you.